Hi everyone, today's topic is all about the rules of debit and credit. So as we have discussed in the previous videos, the word debit means left, which also stands for the value received, and the word credit means right, which also stands for the value parted with. As a rule, the left should always equal to the right. So this means that the value received must always be equal to the value parted with, or simply, the total debit must always be equal to the total credit. There are two basic elements of a business, and these are the what it owns and what it owes. What it owns actually refers to the resources owned by the business or mga resources na pagmamay-ari ng business, and these are called the assets. What it owes refers to the claims of the creditors called liabilities, and claims of the owners called owner's equity. So if we're going to put these elements in an equation, it would result to our basic accounting equation. Assets is equals to liabilities plus owner's equity. In this equation, we can say that the assets of the business are financed by the creditors. That's why we have the liabilities, and also financed by the owners or owner. That's why we have the owner's equity. This equation also stands for the normal balances or the increased sides of these three accounting elements. As you notice, the assets are located at the left-hand side or the debit side of the accounting equation. And this means that the normal balance or the increased side of assets is the debit. Since again, it is located at the left side of the accounting equation and debit means left. The liabilities and owner's equity are located at the right side or at the credit side of the accounting equation. And this means that the normal balance or the increased side of liabilities and owner's equity is credit. Credit because again, the liabilities and owner's equity are located at the right side of the equation, and right in accounting refers to credit. If we're going to illustrate this in the T accounts, let's have the assets first. So in your screen right now is an asset account, since the account title asset is written on top of the account. And as we have discussed in the previous videos, the T account has two sides, the left hand side, which is known as the debit side, and the right hand side, which is known as the credit side. Going back to our basic accounting equation, assets is equals to liabilities plus the owner's equity. So as I've mentioned earlier, this accounting equation also stands for the normal balances or the increased sides of these three accounting elements. So the assets in this equation is located in the left side or the debit side of the equation. So this means that the normal balances or the increased side of the assets is in the debit side. So here in the T account, the increased side or the normal balance will appear here in the left side. So if this is the normal balance or the increased side of the asset, so therefore the decreased side would be here in the credit. So debit to increase an asset and credit to decrease an asset. For liabilities, so in the basic accounting equation, the liabilities is located in the right side or the credit side of the accounting equation. So this means that in the T account also, the increased side or the normal balance of liabilities is located at the credit side of the liabilities account. And consequently, the decreased side of liabilities is located in the debit side of the liabilities account. So therefore, credit to increase a liability and debit to decrease a liability. In the basic accounting equation, the owner's equity is located at the right side or the credit side of the accounting equation. So this means that in the owner's equity account, the increased side or the normal balance must be located here and the credit side of the owner's equity account. And therefore, The decrease side of the owner's equity should be located here in the debit side. So therefore, credit to increase in owner's equity and debit to decrease in owner's equity. The owner's equity may increase or decrease depending on these four factors. So normally, it would increase because of the investment of owner and or the revenues or income. The owner's equity would decrease because of the withdrawal by owner and or the expenses. These four factors can actually be seen in the expanded accounting equation. The expanded accounting equation is based on the basic accounting equation. It's just that the owner's equity portion is being expanded, thereby including these four factors. The owner's equity section is broken into investments, which is consist of the initial investment plus the additional investment, and then minus the drawing or the withdrawal made by the owner, plus the revenue or income, and then less or minus the expenses. For temporary accounts, we have here first the drawing or the personal account. So drawing is a deduction from the owner's equity, and the normal balance of owner's equity is credit. So therefore, to reflect the reduction of owner's equity balance, the drawing account is debited. So the normal balance or the increased side of drawing is here in the debit side of the drawing or personal account, and the decreased side is in the credit side. And so we then say debit to increase drawing and credit to decrease drawing. Next is the income or the revenue account. The income or the revenue is an addition to owner's equity. And since the increased side or the normal balance of the owner's equity in its T account is located at the credit side, so in order to reflect the addition to this owner's equity balance, the revenue or income account is credited. So therefore, the normal balance or the increased side of the revenue or income is located at the credit side of the income or revenue account. And in its opposite side or the debit side is where the decreased side of the income or revenue is located. So we then say credit to increase income and debit to decrease income. Moving on to our last temporary account. So we have here the expenses. So the expense is a deduction from the owner's equity. And since the owner's equity's increased side or normal balance is located in the credit side of its T account, so in order to reflect the reduction of owner's equity balance, the expense account is debited. So the normal balance or the increased side of expenses is located in the debit side. And then the decreased side of expenses is located at the credit side of the expense account. And we then say debit to increase expenses and credit to decrease expenses.